Good afternoon, ladies and gentlemen. Here we have Insight Robotics Limited, a startup company that sees an opportunity to grow in the critical infrastructure protection system. However, the company is currently facing a lot of problems since it is just a startup and it also has very limited capital in order to cater its growth potential. But before I go any further, let me introduce you to my teammates. Starting from my left-hand side, Shawisa, Pakapon, and Pimtida, who will present to you our first, second, and third analysis as well as strategic recommendation in that order. And I, Wasin, will present to you the overview of the company together with the conclusion. So first of all, let's take a look at the overview of the company, where we are and where we want to be. So currently, we are a startup company that is in need of capital in order to cater our growth potential. However, we are lacking a proper management model in order to make ourselves appealing to future investors. Secondly, we rely heavily on system integrators who greatly undermine our profitability. And thirdly, our revenue is limited to the wildfire protection segment. So, where we want to be a management and profit distribution system to make ourselves appear as a strong company capable of manufacturing products to future investors in order to raise capitals. We want to lower our dependence on the system integrator in order to boost our profitability. And finally, we want to diversify our portfolio into other potential segments in order to strengthen our revenue stream. And now, Shawisa will guide you through our first analysis and strategic recommendation.
Thank you, Wasin. Now, Insight Robotics Limited is a startup company and its goal is to expand its business to maybe other sectors and also worldwide. But the most important factor for startup companies is capital. And currently, the company has the opportunity to raise $7 million. However, from a long-term perspective, we see that the future is quite unclear within this area. And this is because the delegation of the profit within the company is still unclear to investors, and also they don't have a structured management system. And therefore, for our first recommendation, we're going to be proposing a managerial structure. The objective of this recommendation is to align the interests of all parties that generally contribute to IRL's profit. So we're going to be setting up a managerial structure, and we are going to be involving all four parties, which are private investors, the R&D, the government, and manufacturers. So so they will have stakes within our company, and they will also receive benefits based on the percentage of their monetary contribution. So what our company will get from the private investors is capital, and what they'll get from us is the profit sharing. For the R&D, what we will get is the technology, intelligence, and facility, and we will also be paying them money for those benefits. And as for the government, we will receive their legal support and also revenue as they will be purchasing our product, and so what they will get from us is our products. And finally, the manufacturer, what we will get from them is the revenue as they will be producing our product and also giving us the share. And what they will get from us is the new technology as they produce our product designs, and they will also get profit. And next, Pakapon will present to you our second recommendation.
Thank you, Shawisa. So first of all, let us first take a look at IIL's business model. So here we have IIL. here we have the manufacturer, the SI, and the government are our final customers. So first, we started out by doing research and product development for the manufacturer. Then in turn, manufacturer will be the one producing for us. But before we can actually sell our product to the final customers, we first have to contact the SI. Then the SI will be the one contacting the manufacturer and then making all the orders and the payment. And the manufacturer will be delivering this product to the government or our final customers. And not only that, for after sales service, SI will be the one to provide the government with installation and maintenance. And so here we can see that SI's main role, there are mainly two roles. So first, they are the one to find prospecting customers and pay the manufacturers. So that is, it helps us reduce our risk. And secondly, they are the one to provide installations and maintenance. That is, they are the one to take parts of the risk again. So in return, what IRL need to lose is that IRL will only get 25% of the sales, the manufacturer get another 25%, but the SI get the rest. So we are losing a huge sum of money from this. And so, ladies and gentlemen, back to our business model again. What if we cut off this SI and have direct relation with the manufacturer themselves and with the government themselves? So let's see how exactly we're going to do this. So to our second recommendation, so first of all, our objective will be to lower our dependence on the SI to secure our revenue stream. So what we are going to do is that we need to step up. We need to take extra roles. That is, we need to be the one to find prospecting customers, and we need to be the one to be in charge of the installation and the maintenance. And what are the extra benefits we can get? So first, we can get more returns from the customers. Now we not only get 25% benefit, but we're getting even more than that, maybe 50 or 60%. And secondly, what is more important is that we are now the one who have direct relationship with our final customers. Now we'll be able to build better relationship with the customers themselves. And so the only issues lies with the long sales cycle. So first, to tackle this issue, in short term, since we are having a 7 million investment, I think in short term there is no problem in this area at all. And in the long term, by cutting out the SI, we are doing mainly two things. First, we are able to build better relationship. That is, in the end, we no longer need to go out and find customers, since we already have a really good relationship with them. So there is no need to find other new customers. And secondly, by cutting off the SI, we are reducing the value change, and so we are reducing this long sales cycle as well. But the problems lie with something even greater, and so Ms. Pimthida will guide you through our third recommendation.
Thank you, Pakapon. Now looking at the current position of IRL itself, I came up with the industry that IRL is currently serving and the unserved industry. The industry that they are currently serving is the wildfire industry, and the untapped industry are those of oil and pipeline, transportation, roads and bridges, water system, power supplies, mining, agriculture, border security, and warehouses. And we will further analyze onto each types of the pros and cons of the unserved and serving industry. For the pros of the wildlife industry, it is our core technology, core expertise that lie into this area. And also we see the room for growth
in this industry as the regulation for Chinese government is decreasing, and there has been putting more budget to support this wildlife security system. Also, we have the existing customer and existing presence in this industry. For the con of this industry, if we are only relying on this industry, we'll have too much dependent onto just one source of revenue. And this represents the low sales turnover as it takes a long time for us to receive the sale because we deal with a lot of government procedure, which taking a lot of long time frame. And while looking at the unserved industry, we see the pros of room for growth of many untapped opportunity out there. Also, we see that we could gain wider customer base through all this industry. And we could also diversify our portfolio and not just relying to just one source of revenue. However, there are still cons, which are barriers to entry, market saturation in some industry, and also the intense competition. However, if we consider both of these, both of the unserved and the serving industry, we see that they are both attractive. So we think that IRL should tap into the new industry while securing their main source of revenue in wildfire. However, they need to create a strategy to accommodate that, and we have came up with that. And this led us to our third recommendation, which will divide into two sessions. For the serving industry, which we are currently doing, and the unserved industry. For the current industry, which are wildfire, what we advise the company to do is to enter into Australian market. The rationale behind this recommendation is that we see that this is the only option for the developed country that's most suitable for the company current entry strategy. And this would also offer company and valuable experience. And this would also pave a way for the company to further enter into another developed countries in that region. And the company could also leverage on their current existing expertise and technology in this area. However, we still see the cons that the company also need additional costs for this current certification. But from the current amount of funding that the company has in hand, I think the company could accommodate those procedures. And for the unserved industry, we have come up with some criteria to help the company to point the direction into the future of which industry they should be focusing on. For the first criteria, we have came up with the criteria of the existing business, whether this industry having the core value that could match with our existing values, in which they have oils and pipeline, power supplies, and the border security that has passed this criteria. And for the second criteria, we have come up with a required amount of additional R&D, in which two industries has passed, which are border security and warehouse. However, between these two areas, we see the thin lines between these two industries. So we advise that the company should do further analysis and have some criteria to choose whether to go about solving this. So we have some criteria to choosing between these two industries, which are the existing SI connection that the company could leverage on, and which one has the lower transaction cost or government regulation, and also the time frame of the project, whether the company could gain the money within the short time frame or the faster time period. And how we are going to implement this strategy by going to new sector. We are going to leverage on our current existing SI connection in that types of industry, and we'll use the current business model that we are currently using for this recommendation. Also, we would go and do the market research and the most favorable location would be the one that we already have the presence in. And now Mr. Wasin will wrap up with the key conclusions.
So before we finish the presentation, let me recap you on what we have been trying to achieve so far. So first of all, in order to tackle the issue of having weak managerial structure, we try to devise an organizational structure that strengthens the company position as a firm that could potentially produce a product to cater to the market. This is also to take into account every single parties that contribute to our ongoing concern by getting them to participate in our organization to make them see that they can venture with us and then they can gain benefit from us. Secondly, in order to tackle the issue of our reliance on the system integrators, we are going to separate ourselves to create a division that would cater into this business segment. That is, we're going to have our own system integration in order to secure our benefits and profitability that we lose to our current third-party SIs. And thirdly, we're going to diversify our revenue portfolio into both current segment that we are in. This is for the short term, that is the wildfire segment, because we still see that there's still certain opportunity, for example, the Australian market that the company has been trying to pursue. And we also want to look into long term that we're going to diversify our revenue portfolio in other segments that we see the potential in. So, with our recommendation, we believe that Insight Robotics Limited will become a much stronger company in terms of providing the critical infrastructure service, because now that they have strong organizational structure, they can be more appealing to the future investor and they can gain future capital to cater their future growth. And at the same time, they also become more reliant on themselves. That is, they also take into consideration taking care of the SI system, securing and optimizing their revenue stream, and also extend their revenue into other segments in order to lower their risk and also increase their customer base. Thank you for your attention, and now the floor is open for Q&A.
Follow up on that question. You're going to ditch the systems integrators. So each unit, working off the figures in there, costs about $200,000. There are 33,000 units in China. So you're talking possibly about, if they get 50% market penetration, about $1.6 billion. The payment terms are 300 days. They're going to be dragging perhaps $1 billion if they're still dragging 60% of that by the end of the year. How are you going to pay for that? You've just ditched your systems integrators, expanded heavily to hire people to maintain this. Where's the money to fund that $1 billion receivables going to come from?
It will mainly come from the sales that we make, as when with our first system we have the SI buying from the manufacturers and we only get 50% of the profit.
But the government doesn't pay for 300 days. That's why they've got the SIs.
Are you talking about the
SIs
the
are there
segment?
because they are a barrier between them. There is a 300-day payment period. You've got to fund that 300 days, and I'm wondering where that money is going to come
from. Our intention or our second, I believe you were talking about our second recommendation, is the SI unit. Our intention is that to cater just the installation and the maintenance. Originally, if the government pay for the current SIs, we think that the government will continue to do that, because now when SI bring out, our main intention for our second recommendation is to take the place of SI in terms of getting a connection to the government.
Somehow. The government, the SIs are absorbing that cost. How are you going to cover that?
We believe that at the first few years, it might be able to absorb that by the amount of money that the company is able to obtain. But then the thing is, the current profit that we lost to SI is like equally, it's about it's equal to the current profit that we get. So it means that if we take their position, our profit is more likely to be double. So we believe that in the long term, we will be able to use that internally generated fund in order to cover the cost that we have incurred. I mean, we're not going to
worried about cash flow.
My question is a bit high level. Based upon your understanding, what is the intrinsic value of this company, right? What is the key asset of this company? And what are the key risks that would allow or prevent you from monetizing the asset of this company in order to support the strategy that you mapped out, right? The longer term strategy of, cutting out SI, expanding into different markets, expanding into different sectors, so on and so forth. But I think going back to Tim's question, that we, in the short term, right, what does this company bring to the market to guarantee the cash flow, to generate the cash flow, to create the profitability, and really to create a lasting value proposition to the market?
I think the key intrinsic value of this company is the R&D, like the key technology that they have. So what we are trying to do here is the reason why we don't want the SI is because we don't want to share the pie of profit with other parties. And also we see that in the future, as this technology becoming having more demand, and then the issues about counterfeiting is becoming more important. So this is something that we want to secure as our core value.
If that indeed is the core value, can that be patented, number one, right? So what is the risk of that being eroded by competition, number one? Number two is, if that indeed is the core value, what allow you to make the assumption of the company can expand into different part of the value chain, for example, to be in the installation, manufacturing, and the servicing?
I quite don't get your question.
If R&D is the core value, right, does that guarantee, support the argument of the company expanding into different process? For example, the manufacturing, the installation, and the servicing of the equipment.
Currently, for our recommendation, we only expand into the we're only just going to cater the SI services. We're not going to touch any manufacturing process right now. And in this kind of business, we believe that installation and system integrator is very close to the research and development, because when we produce our product, the developers will have to have idea on how to implement their product into the real practice. So we believe that it is a blurry line for them, because when they know what their product is, we believe that they will be able to install them as well. We might not have in terms of facility and things like crew for the installation and the actual implementation. We believe that is not the key concern. We can hire them, but the main people who actually know the technology and know how to use them are still with us.
On the expansion in developed markets, you're suggesting that they go into Australia. Fabulous. Let's say it works in Australia. Where are they going to expand to after that? Which other, if wildfires, which other developed markets have the sort of forestry problems? The sort of forestry problems or forestry resources that would require this product? Where else would you go after that? You spent a lot of money getting into Australia, you've got ISO accreditation, you've got all these contacts, you've set up an installation arm, which I'm not sure it's quite the same as R&D installation and management. So where are you going to go after that? Where developed markets, they look lovely because they've got lots of money. But Australia's not a very big market, it's 23 million people. There's actually a lot of forestry in Tasmania, there's a little bit in the Blue Mountains, but essentially not much more than that. Where are you going to go after that?
We think that still the company needs to see the criteria of where they're going to go after and where they could leverage on their connections, because the nature of this industry is relying connection for the contract to be secure. So the company needs to find whether they could leverage on the connection and how much would the deal would affect their value, and could they cater to those size of deals. And those developed countries that the company could go might be some of the countries like Canada, or the country that have intense forest concentration of
So
forest.
how many of those are there?
I'm
I
sorry.
mean, you're spending a lot of money to break into developed markets.
Yes.
How big is the developed market wildlife forestry market globally? Is it worth spending that money? You have Canada, you have Washington State. There's no forests in Britain. Some in Germany perhaps, but that's it. You're far better going into perhaps Argentina, Brazil, Borneo, Malaysia, Thailand, Myanmar, Vietnam, Russia. You just put all your eggs into the developed market basket.
But we see that like these types of deals are all like one-time deals. So if we gain the revenue from all this developing country before all the competitor does, this is one source of revenue that we could get. And we also could get some revenue from the installation of other types of equipment and the maintenance fee as well. And in the future, if we have a lot more new technology, and we could represent and introduce this technology for this developing country that have rich money in their hands, and they could afford all this type of rich technology, because in the case it stated that some of the countries like China, they don't want to spend a lot of money on these types of technology, so they only invest in one time. But we see that these developing countries, they have a future that they could spend more on our technologies.
Also, I believe that when we get into developed market, we can use it as our distribution channel when we want to enter other kind of segment as well. For example, if we build our reputation as a critical infrastructure system provider for the Wi-Fi, then if we provide our good service, then the customer will have the perception in their mind that we provide a high quality service. And then when we enter into other kind of area, either maybe warehousing or cross-border, we will also carry that reputation that we have with us. So we also see it as an opening to other, to expanding into other segment as well.
Can I ask a question about more about SI? Because you mentioned just now that you would like to cut out the SI, right, the system integrators. And the SI is mainly there really to serve the customers, the end customers of different countries. So just to make sure that you have fully analyzed the problem, can you explain to me what do SIs do, and what you plan to do to replace them? And what's the labor, manpower required to replace all these SIs?
So currently, when our company produces develop a product, we need an SI. We are not the one who sell directly to the government. We need an SI in order to find the government to buy our product. But the thing is, when they do that, they also charge a lot. Like they gain at the equal amount of benefit that we gain from selling our own product. So we believe that if we can eliminate them, we can potentially boost our revenue. So of course, we're going to hire more people in order to be an agent, in order to find the government. And we think that at first we might have to sustain the increased cost, but then in the long run, we believe that with this, we will be the one that have the connection with the government. We will be the one that have the connection with our own customers, and we will be the one that take that portion of revenue that we now give it to other parties.
And just to add on top of that, I don't think we'll be only hiring people, but especially for the role of like installation and maintenance, these people need to interact with the final customers. And so these people need to really understand about our product. They really need to understand about our company. So that, because in the end, it's not just about delivering the product itself, but it's about the value that is being delivered from our concept onto the final customers. And so with this SI, they don't really know who we are, they don't really know about our product, and they don't really have that intention of wanting the customers to get that benefit. And so
Also, I think that we can also, in terms of like labor, we can also leverage on our own developers because they're the one who devise this system. So they will be the one who knows how to implement this. So we might be able to use them to be in charge of the installation as they know how to use this technology.